The most common pitfalls I see all investors get into. Stay tuned so you don't make those mistakes. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property. So glad you could join us here. This is episode 2 of our mini series of how to invest in real estate. Now, last week I went over the 3 ways you can get paid with a little bonus one. So if you missed that, make sure you go check it out. But in today's episode, I want to talk about common beginner pitfalls. You know what? Stop. It's gonna just be general pitfalls because I see a lot of so-called pros also make the same mistakes. So make sure you stay tuned to this episode and do not make these mistakes. All right, let's get started with the number 1 most common pitfall I see all the time. Trying to time the market. Oh boy, do I see this in all different ways and forms. It's like going from saying how the market is gonna crash, I'm gonna hang on a little bit, or saying, you know what, I'm gonna wait until the winter months when the prices are a little bit cheaper seasonally and then buy something. Or my favorite yet is, you know what? The bubble's gonna burst, I'll just buy when the bubble bursts. Look, historically speaking, nobody can predict the lowest of the lows and the highest of the highs. The idea that you need to get behind with real estate is not about how to time the market, it's about just getting in the market. How you make money in real estate is by the time that you own property in the market. So this is why we call it's the amount of time you're in the market as opposed to trying to timing the market. You're not gonna make money trying to time it, okay? There's many studies out there that talk about people trying to time the real estate market or the stock market where if they try to buy the lowest time and the highest point, they actually make less money than the person who just bought something, set it, forget it, put a tenant in it, leave it alone, and then the time in the market is how they make money. Because you have to remember, like we said in the first episode of how to invest in real estate, you're missing out on cash flow, mortgage paydown, and potentially appreciation if you are just trying to time it. Time it meaning the market. So as long as you just are in the market, you get the cash flow and the mortgage pay down. Whether the property goes up or down, it's gonna happen. The market is cyclical. Just buy it and forget it and just leave it alone. Number 2, the second most common pitfall I see all the time is what we call analysis paralysis. And trust me, I've been there before, but look, there's so many ways you can calculate cash flow, calculate returns. There's tons of calculators out there, there's tons of strategy, and there's so many analytical ways you can look at a property, from cap rates to cash flows to everything. But here's my thing, and trust me on this. Stop making all these calculations and just get in the market, because the more time you spend calculating things, the less time you're in the market, like we're saying with number 1. What I find analysis process stems from 1 or 2 things, okay? It's either the fear of getting into your first property, which I understand is a lot of money, but look, there's never gonna be a time where it's right, or there's never gonna be a time where you're not scared, because it's such a big investment. Just get in the market and you're gonna thank yourself in the next few years. The other side, I think, is probably perfectionism. The people who love to overanalyze things, there's tons of calculator spreadsheets, and you're looking for that perfect property, that perfect round, glossy red apple. Look, you may find it eventually down the road, but it could be a very long time, it could be a very short time. But the idea is you want to find something that's good enough and it's going to do enough good for you and create enough wealth for you in the future that you just go buy and set it and forget it, like I've been talking about. Don't try to overanalyze everything, because finding that perfect property is so difficult. It's so much easier to just find a property that works, buy it, and forget it. Number 3, the third most common pitfall I find is not having the right people around you. This is from your realtor, your mortgage broker, your contractor, or your property manager. If you don't have the correct people around you and you need advice, you're not gonna get the correct plan and you're gonna make a mistake that could be costly, especially if it's your realtor. So I've always talked about this. The people that you're working with, make sure you ask them, do you own investment property? Where do you own investment property? How many properties do you have? You wanna ask those questions to make sure that you're taking advice from someone who's already been there as opposed to someone who's not. This is especially true for realtors. You wanna find the correct realtor because you want one that specializes in investment. Trust me, if you want to find investment property, it's not the same realtor as the person who just regularly does buy and trade. It's absolutely totally different. And you can talk to some of my clients if you want that say there's a major difference from finding a person who understands how to invest versus the property say, hey, just buy that, looks like a good investment. Trust me, there's realtors that, so don't do that. Number 4, setting expectations. Look, I've had to talk a lot of clients down from expectations, and don't get me wrong, it's great to have lofty goals and ideas and do, but I find a lot of people that right now they're coming to me because they think real estate is the end all be all for how to make passive income, because that's really popular. Like, yes, you can make a lot of passive income, but not to the point where you're thinking that you can get rich quick and then be retired over just one property. Yes, you may be able to do that with like really high yielding things, but there's a lot more risk. But what you want to do in real estate is not get rich quick, it's actually get rich slow. It's slow and steady wins the race, just like the turtle and the hare. You want to be the turtle and win as opposed to be the hare, start really fast and then end off somewhere and not finish the race. Because this happens all the time. People from trying to flip everything, which I've tried to talk them down to trying to buy too many properties all at once and then going into chaos with all the mortgage. Trust me, just do it one at a time, very slowly, and follow the path of finding something that cash flows and then just put a tenant, set it, and forget it. That's how you win in real estate, nice and slow. So those are the 4 most common pitfalls I see in real estate. Make sure you do not make those. If you're wanting to learn more about how you can build a power team starting with your realtor, make sure you contact me. My contacts will be right here. Until next time, happy real estating. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.